Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Some pressure that has set in. Nifty is down 120 points from the day's high. So ahead of the big event, usually we don't react, but maybe there's some nervousness after touching that record high levels. Banks, they continue to fight for the bulls.
Banks outperforming, what's not doing well is IT and pharma today. So some risk off, especially as far as the defensives are concerned. But quite a lot lined up on the show, some important managements. We'll start with the top headlines today. The Nifty and Sensex scaled to new highs ahead of the US Central Bank's interest rate decision today. The up move is powered by financials, even as IT stocks take a beating on likely profit-taking. Midcap lag.
Seagull surges nearly 5% after the company becomes the lowest bidder for projects worth nearly 2,500 crore rupees.
Graphite stocks such as HEG and Graphite India surge over 9%. This rise comes after global major Resonac Graphite announces a minimum 20% global price increase on all new graphite electrode orders.
IT stocks like Persistent, Emphasis, L&T Tech Services correct between 3 to 5% ahead of the Federal Reserve's rate cut decision and a 5% decline in Accenture overnight after the company postponed promotions, raising risks on near-term visibility.
BSE rallies for the third straight session. Remember, SEBI had on Monday disposed of its proceedings against the NSE in a 2019 case pertaining to the co-location facility, citing absence of sufficient evidence. Well, welcome to Midcap Radar. It's a session where, especially in the last half hour, last 1 hour, we've seen the selling pressure intensify, especially if you look at some of the mid-cap IT names. Those are some of the names that are seeing quite a bit of selling. Look at the Nifty now trading near the day's lowest point. Mid-cap index down by 0.8%, and especially the IT names. Look at some of the mid-cap IT names like OFSS, look at Birlasoft, Emphasis. These are some of the names today that are seeing quite a bit of selling pressure, and along with that, some of the pharma companies too today taking quite a bit of the beating. Look at names like Glenmark Pharma, Biocon, some of the other names that are seeing some selling pressure. Sonal, what's on your radar?
Well, a lot of these chemical names, they are doing really well today, and this is at a time when we are not seeing any additional trigger that has come by. But still, those continue to do well, be it Neogen Chemicals, be it Alkyl Amines, Balaji Amines. Of course, I'm sure Hormaz will have some of them on the list as well. So let's do that. Let's go across to him. Midcaps are under a lot of pressure today, so let's go to Hormaz. This is our special segment, Midcap Movers. What do you have for us today?
Most of what you just highlighted, I guess. But yes, there are some nerves that are being felt on the street over the last 30 to 45 minutes. The broader markets are facing some pressure, as is the benchmark index as well. But there are some stocks that are still holding on to the gains within the mid-cap and the small-cap universe. And BSE is one of them, 15% higher now. The stock has risen almost 80% from the lows that it made in July. That's less than 2 months, the stock is up 80%. Graphite makers, HEG Graphite are holding on, as is Angel One. But the sell-off continues in IT stocks, and it is extended from the start of the trading session. Emphasis now down almost 6%. Oracle Financial at the lowest point of the day, down 8% now. Persistent, L&T Tech, every constituent of the IT index and beyond that are also trading with losses. As Sonal just mentioned, chemical stocks are the ones that are another outlying sector today. 7.5% higher for Alkyl Amines, Balaji Amines, Fine Organics, all of them having a good day at the office. Some stocks that are doing well on the back of volumes, and they will come up on your screen. They are beyond the names that we just mentioned. Samvardhana Motherson, 4.5% higher today. BKG is having a good day at the highest point of the day now, 5.5% higher on very strong volumes. And lastly, some other stocks beyond IT, and most of them are pharma names that are seeing some selling pressure. Glenmark and Abbott both down to the lowest point of the day now, down 4%. Blue Dart after yesterday's move is seeing some profit booking, and Atul too not having a good day at the office today. Back to you guys.
Thank you so much for that, Hormaz. Like you mentioned, quite a lot of the IT and pharma names are the ones that are seeing quite a bit of selling pressure. In fact, even some of the gas companies, that did very well in yesterday's trading session, in the last hour have seen quite a bit of selling pressure. Look at names like IGL, MGL and Gujarat Gas. They are seeing some selling pressure emerge, especially in the last couple of hours. But let's now slip into a short break. Up next, we will connect with the management of Galaxy Surfactants to discuss their FY25 as well as demand outlook. Stay tuned.
Welcome back. Let's get some management conversations going. Galaxy Surfactants, that is the first management on the show. The stock has surged 21% in last year. Recently, management cited that Indian demand continues to grow. Centrum has upgraded the stock to an add from a reduce with a revised target price of 3,331 rupees per share as well. This and more we'll discuss on the conversation now. We have Mr. K. Natarajan, the MD of the company, joining us now. Mr. Natarajan, good afternoon. Thank you so much for joining in. Well, you know, one of the things that Centrum mentioned in its note is that you're looking at newer categories, newer product additions. I wanted to talk to you about that right now. What are the current revenues coming in from newer products? Which are the new categories that you're tapping in? Are these high margin products, and which segment do they fall in?
Yeah, so what I had essentially even expressed during our last engagement and also during my investor call has been in terms of how the projects in pipeline with regard to our special ingredients is gaining traction with all our customers in the US and the Europe after a brief period where they're suspended due to the inflationary pressures in the geographies there, and as also due to consumers down trading. So with the inflation coming down, we do see that picking up. So that's going to be something that will reflect in the S2 results. Second, also that we are looking at certain products that we will start launching, which is coming out of the innovation pipeline. One of it we already launched in April in cosmetics Europe. We will have more coming in, but then they would be in line with what is the state of maturity in the innovation funnel.
Okay, Mr. Natarajan, you know, you've spoken in your earlier call about getting into the mild surfactants segment. And, you know, Centrum also has mentioned that actually it has gained quite a lot of traction from MNC clients. Can you speak about this particular segment? What is the kind of response that you've been getting from MNC, and what kind of orders are you getting from there?
So mild surfactants has been in a portfolio now for the last about 7 to 8 years. But with the recent trends, consumer trends in terms of consumers wanting and preferring milder cleansing and moisturizing formulations, we have been expanding capacities in line with the way the demand is growing and accessing newer geographies and more customers. So this is something that we service out of both our India plants and the Egypt plants. So we do see consumer trends moving towards using more and more milder formulations, and consumers are getting pretty aware about what sort of ingredients are getting used in the formulations, and that is good in terms of the way that we are seeing this market growing.
So, Mr. Natarajan, I wanted to understand, you do have around 70% capacity utilization the last time we spoke. With the newer products being added, will you be using this capacity? Is it fungible, or do you need more capacity addition for these segments?
There are some of this we've already expanded, and we have put the capacity in the last 2 to 3 years. Many of these capacities are certainly not fungible, and the capacity utilization numbers will not go up immediately because you tend to invest with a 3 to 5 year range in terms of the demand that we are planning. So they will reflect progressively. But yes, we do see some of the projects in pipelines getting matured over the next 6 to 9 months, and we will see if required whether we need to be looking at certain debottlenecking of these capacities as well.
Mr. Natarajan, you know, let's talk about the actual realization and also the EBITDA per metric ton. Now, freight costs, you know, have seen quite a bit of a rise in the last couple of quarters. Currently, how do they trend? Will you see some margin pressures because of this inflation that you're witnessing, or has it tapered down? So Q2 and rest of FY25, how do you see margins panning out?
We had said margins, we would essentially be in the guided range that we had talked about 21,500 per metric ton that we had guided the market to. So I not want to comment specifically on what it will be for the next quarter, for this quarter, but it's suffice to say that it will be in the guided range. The other one with regard to the freight cost is that freight costs, more than cost, it's in terms of getting on-time deliveries to customers and the service levels improving. We do see over the last about 2 to 3 weeks, we are seeing some green shoots in terms of availability getting better, of containers and sailings like more predictable. But then on freight rates, we're not seeing any great reduction, although we do see some minor reductions in some sectors. But moving forward, what is critical is, we need to have the certainty in terms of container availability and the sailing schedules being more certain than what it has been over the last 6 months. Probably we may have to wait for another month or so to understand whether we have a trend which says that things are improving for the better.
So what happens in this case, Mr. Natarajan, because you still have 6 months to see what happens next, and freight rates, they have been going up. Are you able to pass it on to your customers? And secondly, does it impact the import prices as well for your raw materials? How are you navigating that?
Oh yeah, so typically the freight rate increases and the service level issues impacts both incoming and outgoing. And then we obviously pass on the increased freight rates both on the incoming and the outgoing, but it happens with a lag. So which obviously is something that you cannot avoid, because you can't be changing prices every week depending on how the freight rates are moving. So it always does get passed on with lag of a quarter, and as long as things get better in terms of the service levels and the freight rates remain stable, I think it's a good situation to be in. And then yes, once it starts coming down, and you need to have a secular trend of it going down, not absolutely volatile in terms of the way the freight rates move up and down. That's not good for anyone.
Understood that. Thank you so much, Mr. Natarajan, for joining us and giving us clarity on all of our questions. Let's now slip into a short break. Devan Jain from Inox GFL Group joins us next to discuss their business outlook and more. Stay tuned. Welcome back to Midcap Radar. Even as you speak, you're actually seeing quite a bit of divergence as far as the Nifty as well as the Bank Nifty is concerned. The Nifty is down 0.3%, while the Bank Nifty actually has gained over 1% in the session today. Along with that, select NBFCs too today are doing quite well. So names like Shriram Finance, Bajaj Finance, Bajaj Finserv, those are the ones that are doing quite well in the session today. But moving on, like we promised you, we have Devan Jain, from the Inox GFL Group. Very interestingly, the Inox GFL Group has created an IPP platform where the company has raised close to 300 crores. Along with that, the group company Inox Wind has received a letter of intent from that particular platform itself for execution of 550 megawatt wind capacity on a turnkey basis. Good afternoon, Devansh. Thank you so much for joining us. First up, discuss this particular platform to us. What was the intent behind creating this platform? Also discuss and explain to us, what is the kind of fundraise that you've done? What is the dilution that has been done? We also understand a few, very important investors have come on board with this particular fundraise.
Hi, Vivek. Yes, thank you. I think it's a new platform, a business which we are very excited about. I think what we're doing as a group, we're trying to be at the forefront of the entire mega energy transition play globally. I think this is probably one sector, the entire energy transition piece, which is going to take billions and billions, if not trillions, as we move forward. And I think given our presence and strength in that ecosystem, we are trying to capture every piece of the pie. As you know, at Inox Wind, we are amongst the top 2 wind turbine players in the country. In Inox Green, we are probably the largest and the only listed O&M player in the country. We have recently raised capital also in our EPC arm, Resco, which should get demerged and eventually listed as compliances kick in, which is amongst the top 2 EPC players in the renewable arm. Across the group in Gujarat Fluoro, we're setting up one of the largest battery chemical complexes in the world. We are also in solar, green hydrogen, semicon. So with this platform, what we've really tried to do is we're trying to create more value across the group with the fact that a lot of the group companies themselves need power. And instead of investing on the balance sheet of those companies and making them capex heavy or debt heavy in terms of non-core assets, we've taken this at the promoter level, where all the debt will come in at the promoter level, given that an IPP business typically 75-25 in terms of debt equity ratio. And all the operating companies will basically get power at a fixed price for the next 25 years, which is on par with what we've been sourcing from different, CNI players in the market. It helps us because all these guys save on power cost. They get green power, which helps given that we export big time across all these entities. It creates value across the ecosystem because in all the chemical companies, we save on power cost, increase profitability.
Devansh, we get that. It's a 300 crore fundraise. So what will be the equity valuation of this particular platform? We understand, the group entity and those graphics are running on the channel as you speak. So we understand the investors have come in and they've put in close to 300 crores. So what will be the stake dilution that's happened?
So this is a single digit dilution. Won't be able to spell out the exact numbers given this is an unlisted entity at this point.
High or low?
Let's just keep it at single digit, yeah.
Okay, so it's a single digit dilution that you've done, and mainly the power will be used for captive purposes, or will it be used for external purposes as well?
So, at the platform level, it's going to be three pieces. It's going to be it's going to be supplying captively to the group. It's also going to be supplying to a lot of other industries which want, C&I, which want power. And a lot of them have approached us as a group. Why don't you set it up and give it to us? So we're going to be supplying to third parties as well. And thirdly, we'll also be supplying a part of this power on the power exchanges, leverage the power pricing which exists for the next couple of years at least.
So Devansh, you spoke about cost savings happening for your group entities. Most of them are listed, right? So definitely the investors would want to know what kind of cost savings will they see because of this?
Listed
companies as well, right?
Let's try and put it in the sense that typically when we're sourcing power from the grid, it's at about 50 to 60% costs, which are higher than the price at which we are being able to source this power. More than that, it's also fixed for the next 25 years. So you have no escalations. There's no risk in terms of cost of power going up. Also, it's green. I won't spell out exactly in terms of crores, but yeah, it's very substantial at the group level across all the group companies.
Versus the market rates, how much lower would this cost be? I'm just talking about percentage. Absolute terms, I know you wouldn't be able to give me an answer. How much of it will be an impact on P&L on your listed companies in terms of percentage?
Look, rather than get into percentage, what I would typically try and say is typically power when you're buying from the grid costs 8-9 rupees. And this would be at least 50 to 60% cheaper than that, number one. Number two, I think at the group level itself, I think we're looking at savings over 150 to 250 crores over the period of next 2 to 3 years, just on current demand. As we move forward, obviously the power requirements are increasing across group companies. So I think the savings would be very, very substantial.
Devansh, two questions. Number one, would you eventually look at an IPO for this particular platform? We understand you have very large capex plans, close to 12,000 crores is what you have spelled out. So how will you fund that? So we understand, would the promoter entity be taking on debt? And number two, what is the status as far as corporate simplification is concerned? You have 3 listed entities, and along with that, all of them are pretty much in the same space. One is an turbine generator, the other one provides EPC services, the third one gives O&M services. So when will we see a simplified corporate structure as far as the GFL group is concerned?
Look, so to be fair, I think we've kind of simplified the structure to a great extent. Post the demerger of a lot of these entities and a lot of the group realignment which was happening. We now have IWEL, which is the holding company of IWL, in the final stages of merging into Inox Wind, right? So that makes it one pure play wind company. We will continue to keep Inox Green as a separately listed entity because we see huge traction on the green services O&M play. That's an annuity business, very high margins, very high growth. Inox Wind is the manufacturing arm. The third piece, which is not listed, which gets demerged and eventually gets into being a listed entity sometime next year, is the EPC arm called Resco. I think that itself is growing exponentially, not just on the EPC play, which Inox Wind does, given the order book it carries, but we're going into a lot of other pieces. We're going into hybridization of power, which plays on solar. We're going into cranes. So a lot of those pieces coming into the play. With respect to your question of how we intend to fund this, look, so the promoters have already pumped in a significant capital into the entity. And now we've gone and raised this 300. This covers us for about 600 megawatts of execution at this point in time. And the internal accruals itself can take us to about 1 gigawatt. We will have some kind of capital raise next year, which would provide us enough capital to get to about 2 gigawatts. So I don't think it's going to be too large a dilution. It's again going to be on similar lines, and whether we IPO this or whether we go in for another secondary raise is something we'll decide at that point in time.
Right. Devansh, we'll keep touching base with you as soon as developments such as this keep coming on. Wish you all the best. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.